Hello, everybody. Welcome to Thursday. The S&P 500 was up 0.85% today, ironically on some unusual news as usual. First of all, we had the CPI report that came out today. So CPI grew, headline CPI, which includes everything, 2.9%. So costs on the basket of goods that they're looking at were 2.9% higher than they were last year. They were 0.4% higher than they were last month. Those aren't great numbers. First of all, it was at 2.7%. So it's obviously, the year over year has grown. But zero point 0.4, if you annualize that out and it happens to stay at that level, of course, just to put it in perspective, you'd actually be at 4.8% over the next 12 months, both of which are well above what the Fed is trying to do. Now, the Fed doesn't look at CPI as much as they look at the PCE index that comes out for inflation at the end of the month. But nonetheless, inflation is still going in the wrong direction, is still growing, likely because of some of the different impacts of the policies that are happening right now. However, CPI was in line with expectations. And so a lot of times the market's already kind of factored in these, in this case, a growth in the cost of goods because it's already expected. And so when it happens, it's kind of a non-event. I think the big catalyst today was actually that the first time unemployment claims, these come out every week, and it just says how many people applied for first time unemployment. It grew to a 4-year high this week. That again, you would look at that and say, oh, that's not a good thing. The market should be going down based on that. But what it did, I think it solidified the concept of having a rate cut next week and possibly having a rate cut in October and December also. Long ways to go on those. We got to get a lot of numbers, but that's kind of become the thing now. The market is now betting for 3 rate cuts. There's even a small bet that we could have a 0.5% rate cut instead of a 0.25% next week, which is what happened last year. Kind of surprised everybody with this bigger rate cut because they saw some softness. We're definitely seeing softness in the job market, especially when we look at these first-time unemployment claims. So the thing that I guess I would be a little bit cautious about is just, are these rate cuts going to be enough to kind of turn things around? Because you have to be careful when you start to get these job losses and, softness in the job market, it can kind of cascade into something else. But again, the stock market, generally speaking, really does like these rate cuts. You can tell if you watch what's happening right now. So, we'll see what happens. But that's the main driver today was just softer labor market, inflation, at least on a CPI level, in line with expectations. The market, moved upward as far as that goes. So anyway, we'll see what happens tomorrow. We do have our show tomorrow, Talk Money with Tom. You can, sign in to YouTube and find us there. Watch it live. You can ask questions live if you'd like also. So that's 12:15 to 1 o'clock Pacific time. So look forward to seeing you then. Thank you very much. Have a good day.